Hello and a warm welcome to Money Mind. It's been 10 years since the first decentralized cryptocurrency, Bitcoin, was created. Embraced by some and viewed with skepticism by others, digital currencies have shown that they're here to stay. We asked the experts what it will take for these new forms of money to gain mainstream acceptance. Jonathan Pierce dives into the virtual world of digital currencies. There's been a big move to go cashless in many countries, and digital currencies have once again become a hot topic. Many players already offer tokens and stored value through their apps, and in the gaming space, users already trade items and earn tokens. But for digital currencies to enter the mainstream, widespread acceptance is key.
So usually with a crypto product, you have to manage wallets and keys and passwords and blah, blah, all of this stuff, which people, the everyday on the street, I mean, they're not going to be wanting to engage in that product. It's just too difficult. So I think really the next stage is user-friendly products, mobile apps, mobile payments, making it easy for people to get money in and out of the system and being able to provide some value there. So we're seeing a growth in lending on the blockchain, providing interest rates much better than you can get at a bank for, say, a stable coin in USD.
One of the obstacles is that many people don't understand blockchain, the technology that enables the existence of cryptocurrency. Simply put, when someone requests a transaction, the requested transaction is broadcast to a P2P network consisting of computers known as nodes. The P2P network of nodes validates the transaction and the user's status using known algorithms. Once verified, the transaction is combined with other transactions to create a new block of data for the ledger. The new block is then added to the existing blockchain in a way that's permanent and unalterable. The transaction is then complete. Asia is poised to lead the world in cryptocurrency innovation. CoinGecko is a Malaysian-based crypto data aggregator. The firm says that 80% of all Bitcoin that's currently mined comes from Asia, mainly China. They've also noted a 700% increase in the number of exchanges, with the majority coming from Asia as well.
Binance is the largest exchange in the world, and it changed the exchange landscape by introducing its token called the BNB coin. And this token basically has two main utilities, which is a discount on trading fees and also basically a quarterly token burn to share the profits of the exchange with the traders. So the exchange token has sort of built up a loyalty among traders to trade on this particular exchange. And before long, like many of these Asian exchanges started having its own exchange token, and we are seeing Asian exchanges moving way faster than any Western exchange with the introduction of exchange token. And we'll be seeing a lot of crypto exchanges coming out with derivative products this year as well.
Mr. Ong says it's only a matter of time that we see a cryptocurrency issued by a country's central bank.
We are entering a very interesting time where the concept of money is being redefined. We have seen Facebook trying to reinvent the concept of money with its Libra token, and it's basically trying to build a global settlement layer for people to transact and send money to anyone in the world easily. And we're seeing the same thing. We're talking about central bank digital currency as well. China's central bank has talked about its own CBDC. It'll be very interesting in the next few years to see which concept will actually be the preferred monetary system in the next few years.
One consequence of a central bank digital currency would be to reduce the reliance on the US dollar as a global reserve currency. Ironically, it's the Marshall Islands, a tiny Pacific nation, that will be the first test case. The US dollar is its main mode of currency, but it's hoping to launch the first legal tender cryptocurrency in the world, a digital token called the SOV for sovereign.
If we were to do it in a fiat format, it's going to be a lot complicated because then we have to build a huge infrastructure of our central bank and employ so many people and so many requirements that allow us to monitor our policy and so forth and so forth. But with the digital with the digital format, with the decentralized blockchain concept, we don't have to do all of that because it's self-regulated and self-monitored. And because it's a peer-to-peer, it is no one is actually, responsible and arbitrarily making a decision.
Mr. Paul sees cryptocurrencies as a way to level the playing field in global finance.
Given the context and the size of our economy, we are marginalized because of no big banks will ever want to take the risk to provide these kind of financial services through the correspondence banking because of the risk and reward. I mean, for example, if something goes wrong with certain compliance with the banks that you are dealing with, then you're going to hit with hefty fines. And if you look at the value of those transactions in these particular markets are so small compared to what the implications are for these big banks. So with the digital currency and the blockchain technology, allows us to be more, bring us into the mainstream rather than being marginalized.
The Marshall Islands crypto project has been met with concern by the IMF and the US government, but welcomed by the crypto community.
They're trying to bring their currency in-house, being able to control the sort of growth and be able to manage payments going in and out of the country a lot easier than reliance on an existing network. And I think that if they really prove successful in that, you might see other countries following their path and trying to float their own new currencies.
Market watchers say the People's Bank of China could make a decision on its central bank digital currency by the end of the year.